what to do with arguably America's hottest big stock. Joining us now with insight is ARK Invest Director of Investment Analysis and Institutional Strategies, Tasha Keeney. Tasha, thanks for joining us again on Last Call. I mean,
thanks for having me.
It's tempting to just ride this Tesla train, but at the same time, is it smart to maybe take some profit in what has been a rocket of a run?
And yet, the stock market in this whole period of time, with terror attacks and inflation and wars and pandemics, with all of that going on, the stock market is up 34 times.
Well, investors are unplugging from Tesla, with shares sinking lower today, off just over 3%. The EV maker facing two downgrades in just 2 days this week. One from Morgan Stanley, the analyst there, Adam Jonas, and the other from Barclays. So
on Friday, Tesla stock closed down about 3% at $256.60 per share. Despite institutional investors trimming a little off the top, the stock was still positive for the week. Now the question is, will Tesla fall through its supports, or will it go back to brushing up against a $1 trillion market cap? Your guess is as good as mine. But I currently have a $2,800 bet that Tesla will have a $1 trillion market cap by September 15th. And if I'm being honest with you, I think it's going to soar well past that $1 trillion market cap to trade around 330, 350. But I guess we'll cross those bridges as we get to them. For now, let's hear what the finance media has to say about Tesla's recent activity.
So what to do with arguably America's hottest big stock? Joining us now with insight is ARK Invest Director of Investment Analysis and Institutional Strategies, Tasha Keeney. Tasha, thanks for joining us again on Last Call. I mean,
thanks for having me.
It's tempting to just ride this Tesla train, but at the same time, is it smart to maybe take some profit in what has been a rocket of a run?
Well, our price target for Tesla over the next 5 years is that we think it has an expected value of roughly $2,000 per share. And, we're talking about American-made cars here, which is critical. It's great brand image. It's great for our country. It's great for tax credits. But, what the list does not show is that not all of these cars are made equal. And the advantage that Tesla has in software and in data is unparalleled compared to peers.
My country, 'tis of thee, sweet land of liberty. I'm just playing. I'm joking. Y'all didn't come for that. It ain't even 4th of July, and Tasha Keeney has me amped up.
All automakers should be pursuing full autonomy, right? That's the future of the auto industry. Tesla, by our research, thanks to our associate Daniel McGuire, he put out some great stats today. We think that they're in full self-driving, their FSD software, their fleet is traveling over 1 million miles every 14 hours. That compares to just 2 million miles in the cumulative lifetime of Cruise, which is GM's autonomous car project. So, the advantage is really unparalleled, and we think this is what unlocks superior AI capability.
But how do they, okay, I hear all that,
at scale.
I hear that, Tasha. Now we got all these companies basically giving up and saying, we're coming to you, Tesla, for the charging standard, GM, Ford, and Rivian, but how do they monetize that? It's all cool.
Is it just me, or did he just dismiss the magnitude of Tesla's AI prowess and their data collection and went to the charging? I know it's been in the news a lot. The charging, GM, Ford, Rivian, everybody's capitulating. Well, how are we going to turn that into... That's easy. You're going to charge them for being at the goddamn stalls. That's not what she's talking about, my guy. The data lead, miles driven, it absolutely dwarfs any of those geofence locations, Waymo, Cruise. Tesla is accumulating real world data from hundreds of thousands of cars worldwide. And don't get it twisted, the winner of AI will be the companies that succeed in the data arms race. And as Tasha just pointed out, Tesla's king of data.
But how do you make money from it and justify these kinds of moves and valuations?
Yeah, well, I think, you brought up another great piece of news, which is Tesla's becoming the North American charging standard. This gives them, a look under the hood at what these other EVs are doing on the road, where they're charging, sort of what some of their usage stats are. But you can imagine that this is kind of a gateway drug. I mean, Elon Musk said that he'd be willing to license autopilot technology. And again, I don't think that all of the traditional automakers will be able to achieve full autonomy. So They're doing charging today, but maybe tomorrow they're going for autopilot because they can't make autonomous technology themselves. I think any automaker that does not really won't survive over the next decade. So we think this is going to be a significant portion of Tesla's value over the next 5 years.
Is there another? There's no other Musk. We get that. But is there potential? But by the way, there's actually a guy that runs Tesla day to day, gets no credit. He has no social media presence. No one even basically knows his name, but he's probably the one actually in the office 18 hours a day. Is there another Tesla out there? A Rivian? Somebody else?
Well, there's certainly other EVs.
No, I mean,
right?
like, you know what I mean? Like, not other EVs, but like another Tesla potentially.
Yeah.
Tell me, please, let me know who's the next Tesla so I can put all my money in there. Don't worry, I got you. Are you listening? Yep. Bring it in. Tesla is the next Tesla. You're welcome.
I mean, I hear you. I think Tesla is still at least 3 years ahead of the competition on all fronts, on electrification, on autonomy. They're building a humanoid robot, given the experience that they have in solving for full self-driving. So that's something that these other companies really cannot match.
Yeah, but again, I just wonder, all the cool stuff around Tesla and the stock. It's like I always say, Tasha, the economy is not the stock market. One can go up while the other's going down and vice versa. Tesla and its stock, at some point, are they the same thing or could they be different? And I mean, because when a stock of this size doubles that quickly, you can't help a guy for having, the radar up a little bit.
Yeah, I mean, I think that, ARC focuses broadly on innovation. And we find that, if you're looking backwards, it's very tough to predict sort of these exponential growth stories that we see. And I think that Tesla is just the perfect example of that. So again, I mean, we think that the expected value is $2,000 per share over the next 5 years. So this is just, it's been an amazing story, and we think it will continue to be an amazing story because of that unparalleled data advantage. Of course, they have a charging advantage. Also, they recently announced that they plan to have 100 exaflops of training capacity by the end of 2024. That's up from 4.6 that they announced last year at AI Day. So they're also going to have access to training that they can use for full self-driving, for their other AI projects that really very few companies have even access to, and they're actually building it in-house.
I don't know if you caught that man's face right there, but when she said exaflops, he went like, and I'm done with this interview. This woman speaking Greek, artificial intelligence, autonomous robotaxis, blah. Tell me who the next Tesla is now.
Tesla has been on a big run the last few months. It's up 115% so far in 2023, and our next guest is one of Tesla's biggest shareholders. Joining us right now in an exclusive interview is Ron Barron. He's the chairman and CEO of Barron Capital. And Ron, it's good to see you. It's good to have you here in studio.
It's great to see you too. So I just want to say, before I left home, my wife says to me this morning, I don't want you telling any more of your weird stories. that was going out the door. Don't tell any of your weird stories. And so just one little story. I'm not going to tell you this. The other one I'm going to tell you later.
Yeah. I thought we were going to end the interview right now. If you can't do any of your, what are we going to talk about?
All right, so what do you want to talk first? Do you want to talk the broader markets picture? Or do you want to talk Tesla and the run-up of it? Let's see.
Well, so I just want to mention for a second about, I'll talk about that in just a minute. I know that's where you want to get to. But yesterday or the day before, I was watching your show, and you talked about ESG and how a lot of states are passing legislation or trying to pass legislation to say you shouldn't consider those factors. You should only consider how you can make the most money. And I would point out that we do consider those factors. We do consider good governance, how you treat employees. If you're not treating your employees well, how are you going to retain them? How are you going to hire the best? And how are you going to keep them? How are you going to train them? So basically, we're interested in these things, and also we're interested in making sure that the companies in which we're investing haven't got these risks that we're not aware of. So we are conscious of that. And to argue against the idea that it's not important about how much money you're able to, only making most money is what's important, that we've been conscious of this. And because of that, we've outperformed. So 98.8% of our stocks of our funds have done better than the market, and 45.5% are in the top 1%. Not only in the top 1%, but number one in their categories. And Barron Partners Fund happens to be the #1 performing mutual fund in the United States since 2003 when it became a mutual fund. So we have been able to perform well, taking into account these
Let me just say that.
Can't argue with the track record. Ron Barron, beast.
So we are conscious of how companies act and how they treat people and how they treat shareholders, and so we're aware of all these things. Our business, we keep expanding. We've never had a layoff in the history of our business, so therefore people feel comfortable working for us. They trust us, and we just keep growing. So we're now 197 people, 45 are analysts, portfolio managers, and we do the best we can for our clients, and we do the best we can for our customers and our employees and shareholders. And so one of the things I think is really important is that we don't worry about the stock market. We don't worry about interest rates, economy, what the government's going to do, wars. In my whole history, there's never been a good news year, with one exception, when they took down the wall in between East and West Germany. That's it, one good year for my whole career. And yet, the stock market in this whole period of time, with terror attacks and inflation and wars and pandemics, with all of that going on, the stock market is up 34 times since 1970 when I began my career. It was 1,000 then, it's now 34,000. And the economy, by the way, in that whole period of time is also up, it's up 33 times. It's gone from $800 billion of GDP to 26.25 billion. So despite all this stuff that everyone talks about all day long and trying to figure out what's going to happen, market's up 33 times. And what I think is growth is now beginning to accelerate. And over the next 50 years, compared to the last 50 years, I think that you're going to have faster growth than 7%. But assuming that you get the same 7%, that means that you're going to have 35 times your money over the next 50 years, which means that the Dow Jones, which is now 34,000, will be 900,000. So when everyone talks about, well, is it going to be 32,000 or 33,000 or 30? I'm thinking about 900,000.
Words of wisdom. If you aren't taking notes, that's on you.
Faster growth over the next 50 years, because there's a lot of people who think, let's say over the next 10 years, you could see much slower growth than 7%. I mean, that's been the concern for a long time.
Well, inflation is 4 or 5% of that 7% growth, and real growth has been 2%. And all the growth that's really happened in the world has taken place in the past 20, 30, 40 years. And that's accelerating because of technology.
Inflation, but you expect inflation to be higher too?
I expect inflation to be, as it always has been, as it has been in every single democracy that's ever existed, 4 or 5% a year. So I think everything is going to, be twice as expensive in 14 or 15 years as it is today. So it might touch down at 2 or 3%. But even Volcker, when he left in 1986 or 87, even then it was down to 3% from 18 or 19. We've gone from 9 or 9.5 to 4 or 4.5 or something like that. So maybe go a little bit lower, but it's not going to stay lower. It's part of our economic program.
Whenever I get a chance to hear Ron Barron speak, the concept of patience always enters my brain. Don't be surprised when you see more of the experts fall short of their expectations. It is due to this acceleration Ron Barron speaks of.
Ladies and gentlemen, boys and girls, children of all ages,
Let's get ready to rumble! I'm definitely going to tune in. They will get my money if they have a pay-per-view for Musk Zuckerberg. Who do I think will win? I don't know. Leave a comment down below with who you think will be the winner, and I'll respond in kind.
Bush Securities, bullish on Tesla with a buy, just went to 300 recently, I think. And then Mark Mahaney from Evercore ISI has a buy on Meta and a target of 350. Morning, gentlemen. Good to see you both.
Great to be here.
Can you believe we're talking about this? The fight?
Look, I think the cage match could be real. And ultimately, I think from a stock perspective,
Like, do you think they're going to physically fight, like in a UFC arena?
Oh, yeah,
Dana White invited them?
I do believe that this beef is ultimately could be settled in the cage between Musk and Zuckerberg.
Really? Settled?
Settled. And I think ultimately, look, this is a beef that's gone on for many years. And I do think that this is not just hype. I think they could really fight in October.
Mark, I'm wondering whether or not you saw Meta and Tesla as the preeminent showdown in tech, as opposed to, say, Meta, Apple, or something else.
Yeah, I actually do, Carl. I think it'd be Meta. Apple seems like more of the fight. But it actually, now that you mention it, it's kind of interesting. So this is kind of the second personal scrap, if you will, that Zuckerberg's gotten into. Tim Cook and now Elon Musk. My guess is that if there really were a cage match, I think Zuckerberg would win. I need to get that out because I think he's been training pretty hard. I follow him on Instagram, Facebook. He's put a lot of time into it. I'd worry if I was a Tesla shareholder.
Now, I know a lot of Tesla shareholders would be like, oh, Elon, dismiss this, please stop. We need you to focus on Tesla and blah, blah, blah. Granted, if this match is set like in October, there will be a considerable amount of time Elon Musk would be spending working out. And if you recall his interview with Zuby, the mother has more pressing matters than lifting weights. But should he accept this bout and it's actually official, you best believe Elon Musk will be in the gym. But if the man is able to manage multiple companies, I would not bet against Elon.
Is there actually a worry if Dan is right and these two really get in the ring and actually physically inflict harm on each other? Mark, is that good for either company? I mean, and is there, no. I don't know. How do you view that?
I view it as we need more female CEOs.
Maybe.
Whoa, women don't fight now? What are we talking about? Get the f out of here.
Is there an impact?
I certainly hope they don't go ahead and do it. I just assume this is all great theater on their part. So I just leave that aside. Look, I also want to, these are two very impressive entrepreneurs. So, it's great to see them. Hopefully they're putting this a little bit tongue in cheek. And if they want to entertain people, that's great.
Well, investors are unplugging from Tesla with shares sinking lower today, off just over 3%. The EV maker facing two downgrades in just 2 days this week. One from Morgan Stanley, the analyst there, Adam Jonas, and the other from Barclays. So where does a company really stand? Yahoo Finance's Pras Subramanian joining us now. Pras, we know Tesla, obviously a massive favorite here among investors since the start of the year, this huge run up, but a downgrade, particularly from Jonas, that's pretty big.
Yeah, I mean, he's a pretty long-time bull on Tesla, and Dan Levy the day before, also not a bearish analyst on Tesla, both downgrading, but basically saying that the stock is not tied to fundamentals right now. Not really much news other than some charging deals here and there that are good, but not really needle movers for the stock. So basically, they're talking about how Tesla got caught up in the AI run-up with a lot of AI stocks like NVIDIA. But basically, it's for Levy, it's a long-dated opportunity. For Jonas, he's saying generative AI and AI for driving are two different things. It's not the same thing. They're not the same sort of companies like NVIDIA and others that are rolling up at that. He says we should kind of detach this from reality, wake up from the AI dream is what he's saying. But he says both analysts say the stock is still a long-term own in the space. Like it is a category leader in EV. So, you might want to own it, but not so much right here. In fact, Jonas says don't re-rate the stock here based on this AI stuff. He raised the price target because he sees some upside, but not enough to keep buying here at these levels.
That's what I was going to say, because the one thing I noticed with his note was that it seemed kind of balanced and playing both sides of the coin, if you will, with regard to Tesla. And certainly, seeing the pullback today, we're seeing that knock-on effect of both of those downgrades.
Bullshit. The reason why Tesla stock is being pulled back is because some institutional investors, maybe off of these notes, right? Maybe they're taking on board what they're saying. Big institutional investors are taking profits. Hedge funds, mutual funds, they're all trying to take profits on this incredible run-up by Tesla. They're not exhausting their entire positions. No, there's going to be ups and downs in the market. And what Morgan Stanley and Barclays have effectively done is giving these institutions credence to do just that. The momentum is what they're fighting, not Tesla's fundamentals. Already, they're chasing the stock. If their fair value estimate was based on fundamentals, and you're just talking about the automotive business, you would see that Tesla is breaking records. And because of their stance on demand, they feel there will be a pullback on how many vehicles Tesla is able to sell quarter to quarter, year to year. And for the past few years, it's been staggering growth. So if they want to talk about fundamentals, let's talk about EPS. Let's talk about industry-leading margins. Let's talk about growing capacity, expansion in Giga Shanghai, Giga Texas, Giga Berlin, Nueve Leon. All of these countries that are vying for Tesla factories. The growth is immense. And if you're just going by what Tesla says, 50% compound annual growth rate over a multi-year horizon, fundamentals are more than there. Need I remind you, my 12-month fair value estimate, bear case, worst case scenario, is 364. The numbers I put in that model are low, ridiculously low. And what came out on the other end is about $100 per share to the upside.
With regard to it being the front runner in the EV space, with both of the analysts, did we notice that they see Tesla continuing to just hold its position?
They both said that in the near term that estimates need to come down for Q2. They're too high right now. They say that for the near term there's going to be some sort of a little bit of a dip there, but long term, based on stuff like software, battery technology, the ability to actually outsource software and battery technology to other companies, Joan is noting is that is a big opportunity for them. So there's long-term play, it's still good, but short-term there might be a little bit of hiccups here as sort of the analyst community might be too bullish on their near-term numbers.
And lots of questions just about the pricing strategy that's been laid out here from Tesla, or really the price cuts and then raises that we've seen since the start of the year. We also want to bring in Rochelle Akufo, who's joining us from down in D.C. for the remainder of the hour. Hey, Rochelle.
Hey, Sean. So, yeah, Pras, I wanted to ask you because, I mean, when we look at the deal with GM and Ford when it came to Tesla as well, I mean, do you think that these downgrades, do you think they're fairly justified, at least in the near term?
I think what's happening is that they need to downgrade the stock because if you're a fund manager and you have an index, I was talking to Miles about this. If you own a portfolio of stocks, Tesla keeps going up in terms of price. You kind of got to take a little bit off the table to sort of rebalance your portfolio from like a big institutional ownership point of view. I think that's what's going on there. It's a downgrade based on the fact that we need to lighten up ownership of the stock because it's getting too high for if you were to manage a sort of fund. But for normal investors, more about a watch out here. Yeah, you might see a little bit more pops in the stock going into Q2. You're going to see the delivery numbers come out at the end of the month, so we'll see that. But maybe it's more of a cautionary downgrade right now, not so much that they actually hate the stock right now.
Woo-wee! Delivery numbers. I can't wait. You smell that? That smells like... Kind of smells like record delivery numbers on the way. Look, I understand it. You manage money for other people. You got to take your profits. You got to lock them in. I get that. But to assume a pullback for no other reason besides, whoa, that happened a little too fast, guys. You know they've more than doubled since the beginning of the year, right? It's got to go back down, right? Well, I will challenge that the second half of the year will be even better than the first half. So much so that by September, Tesla will be back in the $1 trillion market club on the backs of their beautiful Q2 numbers. Don't worry, I'll be revisiting this information as my call option expires on September 15th. Well, that's all I got for you today. Be easy. Peace.